Hello everyone, welcome to another Gap Strategies webinar, 11th of July. So this is, as you know, we try to present a variety of market concepts, and there is a kind of a follow-up today on the previous Gap webinar that we provided last month. So just to remind you that this webinar is recorded, so it will be sent to your email. We will send to your email the recording and the podcast version as well. If you need a PDF version of the slides, please download the PDF version from the handout section here in the GoToWebinar, okay? And we're ready to start basically, but before we start, as usual, I need to go through the disclaimer warning. This material provides a general market communication for information purposes only and does not constitute independent investment research. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risk involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. You can find our full risk disclosure on our website, along with all the legal documentation that you might need. So feel free to visit our website, www.hfm.com, and you can find anything you need. So one more reminder, if you're facing any audio or visual issues, please let me know. Hi, Brian. Welcome. Our email address, webinars@hfm.com. Feel free to ask anything you want. And we are ready to start. Let me just okay, perfect. And okay, the very few slides will be like a small recap of the gaps that we covered last time. But mainly today, I will try to go through charts to show you how you can recognize a gap and how you can possibly trade it. Okay, so this is my aim today, to a quick briefing of different kind of gaps and gap trading in an actual gap trading. So we'll try to have a look at price charts, technical analysis along with gaps. If you have something particular in mind, an asset particular in mind that you have noticed a gap, feel free to stick it in the question box and we can go through it, okay? So just to remind you guys that when we look at price charts, okay, we sometimes recognize areas where there is an imbalance between buyers and sellers, okay? And these areas represent some key trading signals, trading hints, okay? They could be, they could be key support and resistance levels. They could sometimes help us identify a new trend or an acceleration of an existing trend or a reversal of another trend. So what these areas are and how we can recognize or locate these areas of imbalance. Um, so one way is actually to search for gaps to check whether these imbalance, let's say, areas have been formed with have been forming with a gap. Um, so if you have noticed a gap, that clearly represents that there is a large imbalance, as I already mentioned, between buyers and sellers. So a gap tell us and help us to identify in the near future some trading uh, trading a signal, let's say. Okay, so yeah, let's move on. Good day, Christopher. Welcome. So today, as I said, is all about gaps. So let me just move on a bit. So I will skip some slides just to show you. Just very, very quickly, just to make sure that everyone is on the same side as me. Okay, this is a DAX 4-hour chart in which I have draw with these arrows a lot of gaps. Okay, just to make sure that you are all on the same. We all understand what we mean by gap in trading. Okay, you see there is no it looks like there is no price action. It looks that there is a clear gap, that there is no price action recorded between the close of the previous candle and the opening of the new one, either to the downside, either to the upside. Okay, so is this disconnection? Okay, I'm gonna go through again. I'm gonna go back to the beginning because we have different type of gaps. So we need to go to have a look one by one, because every single one of those means suggests a different direction or a different bullish or bearish signal, obviously. Okay. Always always remember that gaps tend to they could be, we could claim that they provide a strong signal if they are combined with if we notice actually also a pattern, candlestick pattern formation. So we're gonna check some examples later on. So is this connection uh, um, recorded, as I said, on the previous session, on the closure of the previous session, and on the opening of the new sessions. Okay. So and always have in mind that that gaps turn to be filled in, partially or not. Price action eventually, okay, uh, 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 partially fill or fully fill the gaps. Okay, maybe in a partially fill or partial pullback where the price comes back into the gap. So always market corrects itself and manage eventually to fill the gap. So how we can use let's say how we can now use the the gap the gap trading, or when we identify a gap, how we can use it in terms of risk management, in terms of trading opportunity rights. So sometimes I will get back to my slides, actually, to the, let me just get, come on. Just a second. I'm going back to the gap chart that I showed you earlier. So sometimes when we refer to a gap, we usually say gap up, gap down. So what that means, it means that we notice a gap after we notice a gap and then the price move further to the upside. When we have this is a gap up. When we say gap down, that means that the price fell and we have a gap occurred before further decline of the price action. So there is an important concept though to understand here, okay? An important concept, and I'm referring to how we can go. We are going to assess, okay, the gap. How we are going to assess these different types of gaps, and when we start to monitor it, whether we will manage to spot some kind of a partial retracement after the awards or a full retracement. So there are some set of rules that we could apply once we notice a gap, okay, in order to give us a clue, a clear picture whether where the future for the future performance, let's say, of our asset. So, okay, let's start with one of the most famous gap types. Come on, sorry. Okay, perfect. Okay, here we are, which is the breakaway gap. So, breakaway gap, okay, is typically, first of all, a sign of failure. What I mean by that? As you can see from my little drawing over here, a breakaway gap occurs when the price breaks away from a range. Okay, as you can see, the price was moving within a range. When it eventually managed to exit the range, or any kind of a structure of price. I mean, don't take it from granted that it might be a consolidation, a ranging market or something like that. It might be a descending triangle, it might be an ascending triangle, it might be uh, a wedge or something. Okay, so it's a breakaway gap is when we have the price exiting, breaking, and moving up above or below a particular recognizable pattern, range, structure of a price, okay, but in a so it's a recognizable change in trend direction. So we say that the breakout gap typically is, could be said that it's a sign of failure because it tends, okay, it tends to signify the sign of a new trend. So it's pretty much signal the end of the existing direction, the end of the existing trend, and etc. And why we might see a reversal, we might see the with this breakaway gap, we might see a new structure in a different direction, though. Okay. But usually it occurs after the breakout of a structure, of a price pattern, of a chart pattern, of a ranging market, and etc. Okay, so there will be, if you recognize a breakaway chart, there will be a recognizable change in the direction of our trend. Okay, so now this the reason why I started, guys, with breakaway gaps is because it tends to be, I mean, based on the history, the history of the financial market, based on on researchers, on surveys, etc. And statistics as well. Okay, historical data of the financial markets. It has been proven to be one of the most profitable type of gaps. Okay, that's why it might be the most famous one, the most recognizable one. So so far it has been proven that it's the more profitable type of gap, and that's why I consider to start with it. Okay. So basically, if we see particularly a substantial or a significant substantial size of a breakout gap, okay, this also increases the probabilities of the movement to be strong and to see any signals, and the higher the odds are for a change in the existing trend, okay, in the existing market. So there is a there is a higher probability of a strong price movement to come right. So that's really what we are looking for. For now, if I just solely based on what we see over here, so candle, 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 break out a single candle higher with a breakaway gap. So this is not a confirmation. We need to see the consecutive candles in order to confirm that this is a breakaway gap and whether indeed we have a change in the trend. Would you say the higher the time frame in which the gap is seen, the stronger the signal? Not necessarily, Elizabeth. The higher the time frame, um, the higher the time frame means that we have a more medium or long term view, right? So the higher the time frame means that the new trend, once we confirm it though, it could last for longer. Okay, but so it's not a matter of a strong signal. Indeed, it could be a strong signal. Okay, you got it. Okay, thank you. But because I just don't want to confuse everyone else, just to confirm that a strong signal can be seen intraday as well. Is a strong signal. A strong signal could occur in any time frame, based on the momentum, based on the size of the gap, based on what it will follow after the gap and the confirmation that we're gonna get. But yes, the higher time frame might means that it will the new trend, let's say if it's an uptrend, so it might last longer because we're in a higher time frame. So but just to be not fair, just to be like clear, um, yes, what matters is the size of the gap and how strong the following candlesticks will be. Because if we see a strong price movement, okay, that means that volume is higher, and volume is giving us a clue for breakaway gaps. The higher the volume, the stronger the breakaway gaps, the stronger the signal, the more the odds for a reversal. Okay? Okay, so let me show you an example actually. This is it. So over here, as you can see, okay, we had consecutive breakout gaps, bam, bam. This we could say that is an ascending triangle. Let me draw it actually. It's an ascending triangle. Gap down. Can you see how decisive and big candles these are? You see that? And the slope of these two consecutive candles, can you tell me, someone, just to make sure that you understand? Can you tell me what that means? I mean, okay, we had a huge, nearly full body bearish candle, but still within the triangle. A clear breakaway gap over here, and the next candle was even bigger, nearly full body one, sharp slope. So without, I mean, let's hide this. Let's assume that we were like the following day and we were monitoring our market. So what that means? Can anyone tell me, or shall I? I will go over actually. So what that means, the slope, the sharp slope, the body of the candles, the fact that we have a breakaway gap as well, which is one of the most, it tends to be one of the most profitable ones. The fact that it used to be in a pattern, it increases the odds for a continuation of this decline, for a new downwards trend that it could last longer as well, because okay, this is a weekly chart, but yeah, stronger bearish sentiment, bulls here, release control. Exactly, Elizabeth. Thank you very much. Thank you very much, Elizabeth. You stated very correctly. Exactly. The body of those candles, the slope as well, imply and present high volume as well. A lot of selling pressure. Okay, so you should consider combining your gap strategy or analysis. I mean, if you notice a gap, it's a lot. You need to combine it by monitoring the body of the candles, the slope of the candle, because this gives you clues in regards to the how strong the new trend is, if there is a new trend, and the volume as well, which is clearly increasing over here in this example, and along with the fact that we used to be in an ascending triangle which has now broken. Another example in this chart is again an ascending triangle, but with a flat top, as you can see. So our asset was moving for 2 weeks. Let me just, okay, actually, no, more than a month, in an ascending triangle, which eventually, even though it retested it several times, retested it here, retested it here. Okay, as you can notice, the top of the triangle, as you already know, as you might already know, it's our immediate resistance levels, right? And if you notice, it coincides with an old gap that we used to have. Okay, so that makes this resistance area even stronger. So it's difficult for the asset to break that level. That's why this breakaway gap over here, okay, it's significant because it means that the asset managed to break a strong resistance area that it held for more than a month. So since mid of June, the new the asset managed to break the ascending triangle in the end of July. So and that is an area that it coincides with several that it was retested several times, and also coincides with a with the top of this previous gap. So this increases the odds that the asset has already began a new uptrend, and that there is and this points that now there is a higher probability that the price will continue to the upside until it encounters resistance, until it finds a key resistance, or encounters, I don't know, sellers. And so far today, and so far, so as you can see, it posted a pretty dodgy candle after the gap, but there is still further steam to the upside for the next resistance area, which could be seen on that latest swing high. Okay, so as you can see over here, all this analysis that we have done, okay, gave a lot of a signal about a really strong, okay, that was the very first one, but that one, the latest gap up, it gave us a strong signal that this is the beginning of a new uptrend with really high probabilities to last for a while, but with the very first resistance area, which could be interpreted as a target area at the 60.58, which was the latest swing high that we have. A breakout of that level, okay, it could open the doors to to the 64 area, which is our previous gaps, by the way, okay, could be considered or could be used support and resistance levels. So as a consequence, that means as your potential target or stop losses. In this case, because we have spotted that an upcoming uptrend, the beginning of an uptrend actually, a breakout of this latest swing high could turn the attention to this area over here. Why? Because an area that is a confluence of a gap and a support area that lasted for more than a month. Okay, let me clear a bit this mess over here. How can I clear this up? Erase all. Perfect. Also, okay, I was thinking to cover that later on. Actually, I will cover. I wanted also to show you another way to identify target levels by measuring the size of the gap. But let's finish first with the different types of the gaps, and we'll show that. We'll go through that later on. So we have seen breakout candles, okay. We have seen the potential resistance. By the way, guys, just I want to give you both scenarios, okay, just to be clear. Come on. Okay, here, just to avoid any confusion, on this latest gap up, okay, with resistance at this swing low over here, please note that if we notice a failure of the price movement to extend and break that resistance area, okay, if we see it trying to bumping against this resistance but failing or pausing, failing to break it, or we notice some kind of a consolidation at that level, like struggling to extend above it, we might see eventually another breakout, okay, breakaway gap once the asset finds enough buying pressure. So we might see another follow, how we call it, continuation gap, like another gap to the upside at this level. So one more thing in regards to the breakaway gaps, and one more thing that we are going to discuss in terms of gap price theory, actually, is also this kind of continuation on the price movement. So what happens sometimes is that the price might move away from the breakout, from the breakaway gap that you might have seen. Okay. So and you might have missed actually that gap, but if we have noticed that the price, that after the breakaway gap has occurred, we notice that the price moves away from the gap. This is also an element that that you need to consider. So there is also this element that gaps act like magnets. So in other words, what I'm trying to say is that the price tends to be pulled into the gap after the price has moved away. So for instance, here we do see that so let me just find an example. So let's stick on this example. Here we can see that it fell, okay, breaking the ascending triangle, extended further, right? There is a little gap here, and again, price fell further, another gap here, far away from the previous gap, another gap here, another gap here, okay? And if I zoom in, you will notice that on this third gap, okay, even though, so that was the previous session, right? This is the new session. The price closed here, right? In the new candle, in the new session, the price opened here, okay? Open here, move down, and quickly turn and close here. Okay, so there is some, how can I say that, tendency. Okay, this is not a great example, to be honest, to show you. What I'm trying to say is to give you some examples that occasionally we can see the price coming back and filling this gap. Okay, this is not the best example, actually. Yeah, this is not the best example. So that gap was filled up here after nearly a month. This gap and this gap and this gap were filled like the next 2 weeks. But you can see that eventually, sooner than later, we can see that the asset will always manage to fill the gaps sooner or later. I'm sure that is something that you already knew, just to highlight. In other words, price come back eventually and remembers that it needs to fill this gap. Sometimes it takes days, sometimes it takes some hours, sometimes it takes months like Meta share price. Marco reminded me earlier that this is Meta, that it has managed to fill the huge gap that we have seen. Let me just show you, zoom out a bit, ignore this. It managed in June to fill this huge gap that occurred in the previous earnings season. Actually, no, it was back in February, in the beginning of the year. So I think they reported some very, very disappointing outlook ahead. They predicted really disappointing outlook ahead, so that it was caused this plug. So yeah, it managed to fill this gap just this month, in June actually, June up to date. Okay, but Meta share price over here, the chart in Meta has a lot of gaps, which is very, very important for us to go through it, because we have seen some continuation gaps, as you can see over here, which is a very strong bullish very strong bullish signal. Okay, so let's move on. Let me get back to my slides, going through the next types of gaps, and we're gonna go back to the chart analysis. So how we cover with the breakout away gap. So it means it's a sign of of a new trend, of the beginning of a new trend. Is one of the most profitable gaps because of their relationship with emerging markets as well, emerging trends, sorry, and it presents a high volume, okay, usually associated with upside breakout, but are not necessarily found with breakdowns. Okay, let's move on. Now, runaway gap. Okay, runaway gap. Okay, so okay, runaway gaps are found inside a strong trend usually. So it means that in contrast with a breakaway gap it could be found in a ranging market or in a trending market. So in contrast with breakaway gaps, runaway gaps are found in a trending market, and more precisely inside strong trends. So they are typically placed in price areas of continuation and acceleration. Okay, so not a sideways action, but in a clear trend, and implied to is a continuation. They're a continuation pattern. Okay. Okay, so okay, but they have some limitations. Okay, some limitations, some rules, some guidelines. Let's say they tend to have limited pauses, corrections, or even pullbacks. So, and actually the advantage I would say that they might have is that they can be used, they can be measured, okay, because by the measure of the gap, they might give you an indication of how far the price could move. Runaway gaps are also known as measuring gaps because their primary contribution to the trend analysis is that they fall early in the very first half of the trend and can project the strength and duration of the existing movement. Okay, so let's see an example. This is exhaustion. Come on, give me a second. Sorry. Sorry, just a second, just a second. Let me zoom in a bit. This is JP Morgan. Okay, this is JP Morgan. Not ideal, but we can see a lot of runaway gaps. That's why I chose to show you this one. So, what we have over here. I'll go to the 4-hour chart as well because here we are. Come on, zoom in. Yes, yes. Okay, perfect. So the reason why I wanted to show you this one is because we could spot a, let me just, I want my regression channel, standard deviation channel, perfect. So the asset was falling, as you can see, for nearly more than a month. Sorry. Okay, so there it was forming for 2 weeks in a row. Give me a second, guys. Yeah, for 2 weeks in a row. Here we are. For 2 weeks in a row. Can you see my chart, guys? I think you can. Yeah, we'll put it in bold, and then the. Okay. Okay. Zoom in a bit. As you can see, it was in a downtrend, gap down, then a correction, gap up, and then it started forming a decline in a form of a descending channel, of a down channel. Okay, so we have seen the asset for a few days drifting lower, but within a descending channel. Okay, then eventually we see a huge break above it, extending and closing outside the channel. Okay, so we have a breakout. Okay, not a breakaway gap, but a strong, decisive breakout. Okay, and which followed with a gap over here. Okay, let me just, oops, no. Okay. Okay. So, as I was saying, it's followed with a gap. It followed with a gap up more precisely, okay, which looks like a runaway gap, okay, but it wasn't a significant signal yet whether there will be indeed a new trend and a continuation of this new trend to the upside. So strong breakout outside a recognizable pattern in this case is a descending triangle, huge candle higher, so increasing volume, increasing bullish bias, and another gap up, okay, another gap up, as you can see over here. It looks like more like a breakaway gap, but nonetheless, it cannot be claimed as a breakaway gap because it's all, the asset is already outside the range, okay? And then, as you can see, it moved sideways a bit, but it formed another gap up. So this is a confirmation that these two are runaway gaps with the asset moving higher, okay, higher, posting higher highs, higher lows, and strong runaway gaps. So you see that the gaps, they're quite big. If I measure it properly, okay, so from the beginning of the gap until the very end of the, okay, if I just, from the beginning of the gap, open price, until the closing price until the opening price the following day. So this is the, and you can see that we have some similar size gaps, but the asset remains to the upside. So it's an indication that we have an uptrend established with these consecutive runaway gaps, providing indication that this trend will continue to the upside. So remember what I said, runaway gaps have limited pauses or corrections. So this correction that we have seen here, this consolidation and correction pullback that we have seen here is something that we tend to see in a runaway gap, or even that one, you see, gap up, but bearish and extended for 1, 2, 3, 4, 5 sessions in a row to downside, so a pullback. This is something that, yes, indeed, we keep seeing in a runaway gap, some pauses, some corrections, some pullbacks. So the fact that regardless of these corrections, the market steady or found the support, found the ground, is an indication that it's a runaway gap, that is a correction, and this is a sign of a continuation of the uptrend, okay? So even if you weren't sure here, if you weren't sure here, if you weren't sure here, you should be you should have been able to confirm these 1, 2, 3 consecutive runaway gaps with an uptrend established once you saw this strong support, this area providing a strong support to the upside. So you might thought that you might miss that, or you might weren't sure about it. So we had another one also supported. We had a third one. So there were a lot of chances, I would say. At the first gap, although there was a kind of a bearish equilibrium because it confirms support, will that make it tradable at this point? It could have made it tradable, okay, once these were closed, okay? So after the 1, 2, 3rd candle closed. And to be precise, to the 4th one, to be honest. Yes, you see, higher low, didn't manage to go fill this gap. And just guys, you can, by the way, you can use feather tools, I mean, to confirm whether this is tradable or not, or whether it is a good time to enter the market or not. So in this case, I will have used a momentum indicator to be more precise, just to make sure that that the momentum is on the upside. Okay, so where is it? Come on. I want that SI in MACD. Where's my MACD? Okay. So feel free to use your the rest of your setup as well. Okay, something is wrong with my PC. It's stuck. Okay. What happened? No, it didn't stack. It was in a different, sorry. The settings were in a different, have 3 screens over here. That's why. Okay, so, oh, zoom out. Went backwards. Here we are. So in. Okay. Okay. Can you see that? So RSI was posting higher highs earlier than when we noticed the gap. So RSI was giving us some signs ahead of the actual price movement. And as you can see, regardless of this consolidation or correction over here, it managed to remain above the 50 the 50 zone, the neutral zone. Also, we had this increasing bullish bias sign in MACD as well. So, and actually, once again, it was a bit of a divergence over here. Price was moving lower, but MACD was increasing with the bearish bias decreasing. So there was an indication that slowly bulls are taking the control. On that gap up, when this candle closed, we could see that it was really close to zero, but didn't turn positive. So it turned positive here on the next gap. So Nicole, what I'm trying to say is that if you cannot see it, don't trade it. Once you see it, I don't know whether you are using RSI or MACD, or once you see it based on the indicators that you tend to use in all of your strategies, etc., then if you can see it, then trade it. If you're sure, if you're confident and you can see it, then trade it. Simple as that. So let's move on. Tell me if you disagree. Okay, tell me. Don't worry about. It doesn't mean that I'm right. Okay, always right. It's whatever makes sense to you as well, guys. Yeah, let's move on. Runaway gaps. Okay, I would like to show you Meta because Marco was right. It's a really aggressive and strong move actually since the end of October last year. So these are some impressive runaway gaps, guys. No, I don't disagree, but to be really okay, guys. Yeah, I would like to show you this excellent runaway gaps. I don't know whether you noticed it, but in Meta daily chart over here, after breach 95, 90, no, not even 95, it was down to 90, 87 territory. Okay, we had slowly seeing that the asset was appreciated. Some small gaps over here, but suddenly over here on the February this year, we have a huge gap up. I don't remember the region, to be honest, okay, the news perspective, but we had a huge gap, which is a clear runaway gap, okay? You can see a resistance over here, repeated top, break, okay? Break. We have a correction, a pullback, small pullback, didn't came back down to the beginning of the gap, found the floor, and keep extending higher. That's a clear runaway gap, oh my God, okay? And you can see that we have another one following, and we had a huge trend actually since November. Okay, obviously we didn't notice that, but even if you fail to see this rally lasted for 3 months after this gap up, if you started monitoring the asset, you could have seen this reversal, this pullback and rebound that indicated the extension and the continuation of that uptrend. Why? Because it found some ground over here, some floor, rebounded, extended, broken this immediate resistance over here. So even if you fail to see that, if you fail to see in the runaway gap, by seeing this rebound and the break of the immediate resistance, that was an indication that we have a strong long-term trend. Okay? Okay, so one more thing. If I measure, so let me clear this mess. If I measure, I wanted to tell you about the measurement later on, but we are running out of steam. It's already an hour, already an hour live, and we haven't measured everything. So by measuring the beginning of the gap until the moment that, until the highest level, here, and see, I use a triangle, and I measure the close price of the previous session until the high, or if you prefer, the close of the following candle. So if I move it to the next, actually the next cap, sorry, the next cap, let me zoom in a bit. I measure that support, found the floor, and we have another gap over here. So once that gap established, if I put once you notice another gap up, small or big, etc., but it should be another gap up, you can drag and drop your triangle, because it's an indication where it could move. And indeed, eventually it moved up to here. On the next gap up, again, put it on the close price to find your next target. Okay, that was on the exact gap. Again, another gap up here, put it on the price. Okay, once you have a gap, once you saw the asset closing, maybe waiting for a few sessions just to see whether it's steady, and it gives you another target area. Okay, or if you have missed all this and you have seen this runaway gap, okay, measure that one. It's all about risk management. Okay, next gap is here. Nice and easy. Slowly, slowly. No, Harrison, no, whenever there is a gap, whenever there is a runaway gap, we have some requirements. Remember, runaway gaps. Runaway gap is when it can be found in a strong pre-existing trend. So this is a runaway gap because the asset used to be in an uptrend, strong uptrend. So it is a runaway gap because it has been found in an uptrend, in a strong trend. Okay, in this case, an uptrend. Also, once it happened, we had seen a correction, limited correction, pullback, without breaking down, without breaching and moving below the beginning of the gap. So it was just a tiny small pullback, found support, rebounded. So that was a confirmation that this is a runaway gap. Runaway gaps have some limitation. They should be in a pre-existing strong trend. They should have limited post-correctional pullbacks like here or here. Okay, so this is the only way. If you know something like that, then you can measure it in order to enter the market and identify and spot your target area. You're most, you're very welcome, Elizabeth. Nicole, is it Nicole or is it Elizabeth? Which is, now, let's move on. Harrison, is it okay? you need to see a clear trend. If you cannot see it, you cannot see a clear trend, then wait, okay? Because runaway gaps, once we have one occur, if it's a strong trend, we're possibly gonna have more, okay? Like here. So runaway gap, okay, exhaustion gap. Exhaustion gap are located at the end of an extended trend. So it's not something easy, to be honest. It's not as easy as they are the breakaway gaps or the runaway gaps. They are very difficult to distinguish as a exhaustion gap because they tend to be quite similar with runaway gaps, but so you need to be careful with those. You can spot that is an exhaustion gap only if you are patient enough to wait until the price has returned and fills the gap. So this is when we can declare that it's exhausted. What I mean, so remember, we said that runaway gaps, let me get back to the runaway gaps, right? They will show a correction, a pullback, but they will not fill the gap. They will partially fill the gap, right? Partially, never fill the gap. It will be an exhaustion gap if it fully fills the gap or even moves below it. So for risk management levels, once you see a possible runaway gap or exhaustion gap or whatever, you need to wait. If there is a pullback, if there is a correction, you need to wait for this decline, this correction to pause, and it indicates a rebound in order to claim that is a runaway gap. If there is a consecutive decline until it fills the gap and even moves below it, then we have an exhaustion gap, which is the exact vice versa indication. It's actually it's a reversal indication. Okay, means that if we were an uptrend, it means that we might see a reversal to the downside or a really big reversal to the downside or a strong downtrend. It might means that the so far uptrend ran out of steam. Clues that the exhaustion gaps are forming include periods of high volume and price filling the void within few bars or on the same day. Okay, so we have some nice guidelines that help us to identify whether we have a runaway gap or an exhaustion gap. As I said, it will fill the full gap, okay, or even fall below it. But this will happen quite quick. It could happen in the next few hours, days, depends which time frame you are using. But if you're in a daily chart, let's say it could happen within the next few days. But if you are in an intraday basis, it might happen the very same day. I mean, within the day. Okay. Oops. Give me a second. Actually, let me double check whether I have saved an exhaustion gap. Qualcomm daily. Okay, yes, this could be seen as an exo. So we have a nice rounding bottom over here, a runaway gap, a runaway gap. Let me draw the runaway gaps with green. Okay, nice strong trend. Let me zoom in actually. Okay, a nice rounding bottom. Is it a cup and handle? No, it's not really a cup. Is it a cup and handle? It looks like a cup and handle. It is a rounding top. No, bottom. Sorry. No, it's not a cup and handle. No. So rounding bottom, tiny gap over here. Looks like a runaway, but it quickly filled up, so it could be seen as an exhaustion, but limited. Okay, so 1, 2, 3, 4, 5, 6 days until we figure out whether it's a runaway gap, exhaustion gap, and etc. So found some floor, extended higher, another gapped up, so that was a clear runaway gap with the indication that, can you see that? So the confirmation, the tradable gap was this one. Why I'm saying tradable gap? Because we had a rounding top, a really weird, questionable gap over here because it was filled in the same day. Can you see that the candle came down here? So it filled the gap the same day. So we weren't sure what's going on because we had a gap, but it quickly filled it the same day. Some consolidation followed, okay, ranging market. A strong bearish candle found the floor over here and a strong rebound closed here, which is a key resistance area. Then a decisive gap, which why I'm saying decisive, why it's so important, because it's a big gap which actually coincides with 3 times resistance area, lasted for more than 2 months. So gap, so we are already in a rounding bottom, okay, which is a bullish pattern. So very first indication is this rounding bottom. Second indication is this gap up, which is open at the resistance area, 2 month resistance area, and it close and break this resistance area and close well above it. So the candle occur after the gap, it closed up here. So we have a rounding bottom, which is a bullish candle, a huge gap at the resistance area, and a breakout of the resistance area with the asset closing well above it. So this is 3 signs that we have a bullish signal in an existing rally, gap higher, breaking resistance area. So there was a clear runaway gap. And okay, why I'm showing that? Because we have this runaway gap. Okay, very, very good. We could even measure it. And we could see that there was an indication that the actually, yeah, there was an indication that it could breach 136.78. It did breach it, and once it breached and broke it, it turned below it, and there is some kind of a lower lows and lower highs occurred, okay, until the asset came down to the beginning of the previous runaway gap, to the top of the runaway gap, posted further decline, filling the gap, consolidated a bit. You see that? Filling, so consolidating within the previous gap. So that's a very strong support area in which the asset is struggling to exit until it eventually extends lower with a breakaway gap here. So this is a clear exhaustion, okay, and the formation of a new downtrend, strong downtrend, with many indications. What I mean, it was this pullback with consecutive lows and consecutive highs. One gap down, 2 gaps down on the support area. Consolidation on the same area that it used to be our runaway gap, and until it finally exit the range and close well below it on the 6th of March. Let's see. So as you can see, decline extended for 1, 2, 3, 4, 5, 6, 7 consecutive days with the asset extending down to 113 territory. It's not a clear exhaustion gap, but it's okay. It could be seen as a good example. Actually, if we go to the weekly chart, you can see that it's an exhaustion gap. Okay, so I'm referring to this one, by the way. This one. Come on, Andrea. Okay, let me clear this mess. So this one is the runaway. Boom. Extended. Start turning lower. And here, actually here, on this candle, we have the confirmation that is an exhaustion. It's a reversal. As you can see, we have a clear downtrend. On this exhaustion gap, okay, this exhaustion gap, after this exhaustion gap, which filled the previous runaway gap, the asset extended further to the downside until 113 area, had a small correction, and then it continued to the downside until it breached October 2022 lows. So you can combine things. You notice a runaway gap. Okay, very good. Then you notice that it started pulling back for 1, 2 consecutive weeks, 3 consecutive weeks, 4 consecutive weeks. So you thought, okay, this might be an exhaustion gap. Even if you miss that, okay, on that rebound, you could set your channel to make sure to just to double check whether indeed the asset is moving somehow in a channel or something. So by connecting, okay, actually this is not the way to do it, just connecting the so far highs and lows, okay. Oops, sorry, come on, the so far highs and lows. Okay, so this exhaustion gap, this pullback, which provided a lower high, okay, the consecutive bearish candle, or even the breakout of this latest low, were some consecutive signals that the asset is in a downtrend. So even if you missed these, even if you missed this one, even if you missed this rebound, this swing high, which is lower than the previous one, this 1, 2, 3, 4 consecutive candles, 5 consecutive candles, so there was a lot of indication that the asset was in a downtrend. Okay, if I zoom out to the daily chart, especially, zoom out, come on. You see, guys? Actually, no, the better one. We need tighter. Rebounded, struggle, extended lower, breaking this immediate support level, extended, then break again the latest low here. Okay, down, 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 and another gap down, which brought the asset as low as the as October's bottom. What else left to be discussed? Exhaustion gap followed by a breakaway gap. This is something that occurs very, very often, to be honest. Um, so give me a second. Notice that earlier. Where is it? Where is it? Yeah, here it is. So let me say it side by side. The so-called island reversal gap. So exhaustion gap followed by a breakaway gap. So island reversal gap combines two gaps, exhaustion gap and a breakaway gap. So like the exhaustion gap mentioned above, an island reversal occurs at the end of the extended trend. The island reversal is typically located between low volatility and low volume events that could conceivably be a lengthy in time. So what we mean by that, sorry, what we mean by that is this quick swing highs and sorry, not swing highs, is this quick reversal that sometimes occurred. So we have a gap up. You cannot tell whether it's a runaway, breakaway, okay, actually in this scenario, you can say that it's a breakaway gap because this looks like, yeah, actually it's a descending triangle, isn't it? Or a channel. Let me just fill this. Yeah, it's a descending triangle, gapped up hugely, consolidated, okay, sideways, sideways from 336 up to 343, sideways, sideways, and then boom. Okay, and then eventually we have an exhaustion gap. So as you can see, the bottom of the consolidation, the area between the bottom of the consolidation occurs temporarily with the beginning of the breakaway, initial breakaway gap and the bottom of the exhaustion gap. They are pretty much on the same floor, 33470. So this is an island reversal gap, okay? So that's basically an indication of a bearish outlook. So it was a massive sell-off with the asset consolidating so far, okay, for 1, 2, 3, 4, 5, 6 hours in a row. So it would be very interesting to see how Microsoft will open at 4:30 on the US Open, because we have this island reversal gap combined by breakaway gap and an exhaustion gap, and it tends to occur at the end of an extended trend, as we said, typically located between low volatility and low volume events. So let's just wait and see whether this will indeed exit this so far, that this sideways movement, and extend further to the downside. So keep an eye on this range happen after the exhaustion gap. Exhaustion gap followed by breakaway gap, it tends to be a bearish formation. Okay. Guys, I think that's pretty much it. I'm gonna call it a date. We are already 20 minutes plus post the hour, even though I wanted to, okay, actually before we call it a date, okay, Qualcomm looks like a cup handle visually. Yes, but I wasn't really sure, to be honest. I wasn't feeling confident enough. Never mind. So before I close the session, I wanted to show you also that there are some useful tools online provided by several websites that presents a list of the days gaps down and gaps up. So sometimes you cannot visually, if you haven't seen a gap down or you just at the beginning of your day, you want to double check whether there is a significant gap down or a gap up. So you need a bit of inspiration. So it could be very useful to use this gap up and gap down bar chart table. So yeah, you just go to bar chart, stocks, performance. Where is it? Sorry, perform under the performance literally calls gaps up and gap down, and there is a list for all the US exchanges and gives you the gap up if you go to the gap down and the gap down. Come on. And the gap down, as you can see over here. So it gives you the biggest gap downs occur and the biggest gaps ups occur so far. So one example is this advanced auto. Okay, if it's way too high, you can monitor it. I mean, you can go to your chart and check what's going on. For example, advanced auto parts, 2.37% gap down the previous day. So, and yes, indeed, this is what was it? It was actually not the previous day, it was the beginning of June, okay? So I think this is a 5 days. That's why this the bar chart table is a 5 days review. Sorry, it's a month review, isn't it? Let me double check. You can amend it, by the way. Last updated yesterday afternoon. So okay, so from the so far the gap remains intact, 3.37%. A gap from 70 down to 66.90. Okay, so I guess because there was another gap down over here, but that was the massive one back in the beginning of June. Gap down. Okay, this is the daily chart, and the asset held below it, extended lower, and right now is consolidating. So you can use this kind of tables just to spot a potential trading signal. You can go back to your chart, monitor, check, is this something that it could be tradable? Is it something that I should put in my watch list, and so on and so forth. Another one, oops, sorry, wrong. So gapped up, see whether there's an important gapped up. That's small market cap companies, to be honest. Try the percentage shouldn't be lower than 1.5%. Okay, otherwise it's not a significant gap. No, there's nothing to cut my eye. Okay. That's the bar chart. Another one is the market chameleon as well. Gapped ups and gap downs. Yeah, it's just to give you an idea of the very latest gap ups and gap downs occurred and spotted into the market. Okay. Yeah. So that's pretty much it, guys. I'm gonna call it a date. I have some I think I kept some examples in my slideshow. Okay, we haven't, so let's go to the takeaways. we pretty much have seen also the opening gaps. Pretty much, we have seen those as well by doing the live analysis. Where is it? Takeaways. Okay, takeaways. Gap represent the most significant imbalance between buyers and sellers, as we already mentioned. They have the power to predict the firm and warn of reversal when it comes to the trend analysis. The gap sequence with trend usually follows breakaway, runaway, exhaustion, and then a reversal. Act as magnets and draw price in. So have in mind that eventually the gaps will be filled. And they are most commonly found among equities. That's why today we have seen solely stocks, okay? Because they are more commonly found among equities than future markets because of the limited time equity markets are opened and orders can be filled. So that's pretty much it. Remember, if you cannot see it, don't trade it, okay? So I'm done. Have a great day ahead. I have some further examples, by the way, and this is a Bitcoin actually, not a not a stock, with a flag over here, uptrend flag, breakaway gap, a bit of a correction, and we had two small gaps over here with the asset breaking the immediate resistance, and that led to a sharp rally and a long-term rally actually for the Bitcoin in this case. Gaps, as you can see, could provide support levels as well. So that's pretty much it, guys. I'm going to call it a day. Have a great day ahead, and I'll see you again tomorrow with a live analysis with Marco. And as usual, Thursday is all about Instagram question and answers. We're gonna reply to your questions live in Instagram, and that's pretty much it. Thank you very much. Anything you need, please send me an email at webinars@jfm.com. Any opportunity to look at Berkshire? Is it Berkshire? BRK. Help me over here, Nico. BRK Daily. BRK Daily. Wait, let me check. BRK. I didn't notice that question that you had. BRK. BRK. Brookline? Berkshire. Berkshire. Where is my Berkshire though? Let me just double check. Berkshire Group. Let's put the white chart on. Here's my white. Daily, you said? It is daily. What we have over here. Okay. Boom. Gap down. Extended down. Support. Extended down. Reversal. Not sure what I'm seeing over here, Nicole. No. No, I don't like that one. Gap down, extended lower. Okay, extended lower. Gap down, another gap down, filled, extended, filled that one as well, extended, find the resistance over here. Let me see. Find the resistance over here, pull back, gap down, found support though over here. So we can see that they found support exactly on the 23.6 Fibonacci level, rebounded, not filled this gap yet. So still, my dear Nico, this gap over here and this 38 and this latest swing high over here remain a key resistance area for the Berkshire. So we need to see basically a break above this latest swing high. A breakout of this latest swing high, the 39, 30, 40 to be more, 39.86. That would be an indication that eventually this gap down could be filled with the very first target area at 50% area and later on this gap, but we need to see the asset extending higher, breaking the 39.86. Yeah, not definitely something that you should monitor, keep an eye on, but for the time being, yeah, just to stick on your, just write it down on your watch list, but nothing certain yet, nothing confirmed yet. So yeah, we need to patiently wait and see how the market will open in an hour. Yeah, watch list, exactly. Thank you guys. Good luck with everything. Take care. Tomorrow's inflation day and expected to be very, very, very volatile once again. So yeah, take care. Have a great day ahead. See you again tomorrow. Bye bye.